Welcome to the Deep Dive. Today, we're tackling something that's probably on a lot of people's minds.
Yeah.
The current buzz around U.S. tariffs and, what it could all mean for your financial picture.
Yeah.
We're digging into a recent YouTube video from FinTech. It's called Trump Tariffs Will Create Millionaires in 2025. Here's how. Trying to make some sense of it.
And it's totally understandable if you're feeling a bit uncertain right now. The stock market's been choppy, hasn't it? And these new tariff discussions, they definitely add another layer of, well, complexity.
Exactly. So our goal today is really to cut through that uncertainty for you. We wanted to break down what tariffs actually are, at their core.
Yeah.
Look at how they've been used historically, and then explore the potential ripple effects. The challenge is sure, but also maybe some surprising opportunities. The video hints at those.
Right. The millionaires part of the title.
Yeah, exactly. We want to give you the key insights without, getting bogged down in jargon.
And like you said, our main source here is that FinTech video. They really get into the analysis, the current situation, the history, and importantly, the potential stock market implications.
Okay, so first things first. Let's define this. What is a tariff? The video gives a pretty good analogy, actually. Think about going to the grocery store, right? You pay sales tax at the checkout. A tariff is kind of like that, but it's a tax the government puts on goods when they cross borders.
Right, when the ships pull into port, basically. That's where the tax happens. On imports, usually, but sometimes exports, too.
And historically, they've had, two main uses.
That's what the video points out, yeah. Originally, they were a huge source of government money, like the main source for the U.S. government for a long time.
Oh, okay.
But they've also been used more strategically, to influence trade, making goods from one country more expensive to encourage buying from another or from home.
Okay, and this is where it gets interesting potentially for investors. The video really emphasizes that these tariffs can have wider effects, things you might not expect.
Exactly, unintended consequences sometimes. But that can also create potential advantages, market edges, maybe?
The video uses coffee beans as an example, which I thought was pretty clear.
Yeah, it's a good one. So imagine a country has its own coffee growers, right? But they're facing competition from another country that can grow beans way cheaper, more efficiently.
Okay.
So to protect the local guys, the government slaps a tariff on the imported beans, makes them more expensive.
Right. The goal is to help the local farmers, keep them in business.
But, like the video shows, there are downsides. For one, maybe the local companies don't feel the pressure to innovate as much, They're protected.
Less competitive globally, maybe.
Could be. And then there's what the video calls collateral damage. Think about your local coffee shop.
Oh, right.
If they relied on those cheaper imported beans, suddenly their costs go up. That wasn't the intention of the tariff, but it happens.
Which makes you wonder, are there other ways to support industries?
Well, yeah, and the video mentions this too. Things like direct subsidies, tax breaks, maybe funding research to help them get more efficient.
Things the U.S. has done, especially in agriculture.
Absolutely. So tariffs aren't the only tool in the box. It's important to remember that.
So to really get why tariffs are such a hot topic now, you need a bit of history. It's kind of surprising, actually. The video talks about a chart showing that back in the 1800s, the average U.S. tariff rate was often near 50%.
Yeah, 50. It's hard to imagine now. And get this, before 1942, tariffs were basically the main way the federal government made money.
That's wild.
But then there was this huge shift, right? After World War II, the U.S. really started pushing for global free trade.
Why the change?
Well, a couple of big reasons the video touches on. One was the idea that if economies were all tangled up together,
Harder to go to war.
that was the hope, yeah. Less tension. And second, the U.S. was becoming this, dominant global power. Free trade helped spread American influence. Soft power, they call it.
The video mentions some old anti-free trade poster from the 1800s.
Yeah, just illustrating that this link between trade policy and global power isn't new. It's always been there.
So as the economy changed, the government found other ways to get revenue.
Exactly. Income taxes, payroll taxes became much bigger. And tariffs, they sort of shifted into being more of a tool, maybe to punish other countries or influence their behavior.
Like an economic weapon, almost?
In a way. But again, you always have that collateral damage problem we talked about with the coffee beans. Those unintended side effects are always part of the deal with tariffs.
Okay, let's bring in a little bit of basic economics here. Supply and demand. The video uses this framework.
Right, the classic curves. It helps understand the price impact. Basically, higher prices generally mean less demand, but producers want to supply more.
And lower prices mean more demand, less supply incentive. Simple enough.
So a tariff is like adding an extra cost, right? It artificially pushes the price up for imported goods.
And that affects how much people buy.
Definitely. And the video mentions these loss triangles on the supply-demand charts. They might seem abstract.
But they're real things.
Oh yeah, they represent, businesses maybe struggling because their imported parts cost more now, or consumers just not being able to afford something they used to buy. There are real costs, real trade-offs.
Even if the goal is to help someone else, like domestic producers.
Right, and sometimes the thinking behind tariffs is, well, yeah, it might hurt us a bit, but it's going to hurt the other country more.
Like trying to achieve a bigger goal. The video used an oil embargo analogy.
Yeah, like blocking oil from a country. Gas prices might go up at home for a while, but you're doing it for a strategic reason. The big question now is whether the current broad tariffs have that kind of clear strategic goal.
Okay, so let's talk about the current situation. The video clarifies this. It reminds us first about the tariffs from the last administration.
Right, those were targeted mainly at China, about half their goods, roughly.
And the reasons given were things like IP theft, stealing tech.
Yeah, that was a big one. Also, currency manipulation claims, unfair government subsidies, especially for things like electric vehicles. The video used the phrase finger on the scale for both sides, kind of.
But now, the situation's different.
That's the key point the video makes. It's shifted. Now we're seeing this proposed blanket 10% tariff on imports from everywhere.
Everyone, not just China.
Everyone. Including countries we haven't accused of unfair practices. That's a big change.
And there's more, right? The Vietnam tariff.
Oh, yeah. The video highlights that one specifically. A huge 46% tariff proposed for Vietnam. And the irony is...
That's where U.S. companies move to, right? To get away from the China tariffs.
Exactly. So you can imagine U.S. businesses are not exactly thrilled. The video mentions this is contributing to companies lowering their earnings forecasts. It's messy.
Okay, to make this really concrete, the video uses Apple. That's a great example.
It really is. Because their supply chain is just incredibly global. Raw materials from Africa, maybe?
Chips from Taiwan.
Crucial chips from Taiwan. Design work here in the U.S. assembly in China or Thailand or Vietnam. It's all over.
Which lets them be efficient and manage costs.
Right. Now, imagine a big tariff hits a key part, like those Taiwanese chips. The video mentioned a potential 32% tariff initially.
Ouch. What would that do to iPhone prices?
Well, if Apple wants to keep its profit margin, which is pretty high, around 50% hit like that on a major component could mean a massive price jump. The video suggested maybe $1,400 for an iPhone.
Seriously?
Or even like $1,700, maybe $2,000 if other countries hit back with their own tariffs. Retaliation.
Wow. But that didn't quite happen, did it? The video mentioned some back and forth.
Yeah, and this really shows the uncertainty. The video says the potential Taiwan tariffs dropped to 10%, apparently after some worries in the U.S. bond market. And then, almost as the video was being finished, the government announced exemptions. For phones, for computer chips, key stuff.
So, it's chaotic.
That's the word the video uses. It's chaotic. Makes it incredibly hard for a company like Apple to plan anything long-term.
And the stock market hates that kind of uncertainty.
Exactly. The video explains that. Imagine you're Apple. How do you plan next year's production if you don't know if a critical part might suddenly cost 10% or 30% more? Or nothing?
Yeah, impossible. And if prices did double?
The video suggests demand would plummet, both overseas, where the U.S. tariff doesn't apply, and even here at home, people just wouldn't buy as many.
And the extra money from the tariff goes to the government, not Apple.
Right. So Apple makes less profit, might have to lay people off. Stock price probably goes down. It's a negative cycle, potentially.
So given all that potential damage, why? What's the rationale behind these broad tariffs?
Well, the video suggests it's probably not about raising government revenue this time.
Okay.
It seems more pointed towards that idea of punishing another country, or maybe, more specifically, tackling the trade deficit.
Ah, the trade deficit. Importing more than we export.
Exactly. The video shows the presenter's take on a chart President Trump used, focusing on tariffs, currency manipulation, trade barriers, all related to that deficit idea.
But is focusing only on the trade deficit the whole story? The video raises some counter-arguments.
It does. Good ones, too. Like, take Taiwan again. Yeah, the U.S. buys more computer chips from them than we sell them stuff directly. But We benefit hugely from Taiwan making those chips for the whole world's technology.
Right. It powers our tech companies, too.
And the video also points out, the US dollar is the world's main currency, partly because of these trade imbalances. Everyone needs dollars to trade.
Huh. Didn't think of that.
Plus, there's the risk of actual shortages here if tariffs make essential imported parts too expensive for US companies.
So who's driving this focus on deficits? The video mentions someone. Peter Navarro.
Yeah, Peter Navarro. The video suggests his thinking, which apparently draws parallels to the 1800s tariff situation, is a big influence. Even mentions Elon Musk pushing back against it.
So lots of debate.
Oh, definitely. The core argument in the video, though, is that these super broad tariffs, just trying to zap the trade deficit, might be counterproductive.
The cutting off your nose analogy.
Yeah, cutting off your nose because it was itchy, I think was the phrase. The presenter argues that generally, free trade, even if it's not perfectly even, tends to be a win-win overall, creates more wealth, even if it's distributed unevenly.
Okay, so uncertainty, potential downsides.
Yeah.
But the video's title mentioned millionaires. Where are the opportunities?
Right. Okay, so despite the gloom, the video does pivot to potential investments, companies that might actually benefit from this tariff environment.
Interesting.
First one is Rockwell Automation, ticker RO.
What do they do?
They're big in industrial automation, software, robots, control systems for factories.
So the idea is if tariffs push manufacturing back to the U.S.,
those factories will need to automate like crazy to compete on cost globally, so Rockwell could see more business.
And this wasn't happening already. Onshoring.
It was, yeah. The video notes that the pandemic supply chain mess started it, and then you had laws like the Infrastructure Act, the TGS Act, Inflation Reduction Act, all pushing for more U.S. production.
So the tariffs might just accelerate that trend.
That's the theory. Rockwell also pays a dividend, about 2.3%. The video calls it medium risk, medium reward. Steady income, recent investments in AI and automation.
Okay.
Second one is Eaton Corporation, ticker ETN.
Bigger company.
Yeah, larger, more diversified. Electrical gear, power systems, industrial parts. Think circuit breakers, stuff for motors, even aircraft fuel systems. They're plugged into the whole U.S. manufacturing base.
It's a broad exposure.
Right. And interestingly, the video mentions they invested over $1 billion in expanding manufacturing in South Carolina, starting back in 2023. Pretty timely.
Good timing, yeah.
Apparently, a big chunk of their 2024 revenue, like 43%, came from their U.S. electrical segment. And they already had a backlog of orders, record profit margins, suggesting that reshoring trend is real.
Okay, so those are specific companies. Anything else?
Yeah, one different approach the video mentions for handling the uncertainty, it's an ETF.
Exchange traded fund.
Right. The iShares MSCI USA Minimum Volatility Factor ETF. Yeah, basically it tracks U.S. stocks that have historically bounced around the least in price. Low volatility.
So the idea is reducing risk.
Exactly. Not aiming for massive growth, necessarily. And the video notes the expense ratio is a bit higher, but it's about trying to find some stability if the market stays choppy because of tariffs or, whatever else.
This makes sense. So wrapping up the thoughts on tariffs themselves.
The video really stresses looking at the data, the economics, not just having an emotional reaction.
It's hard sometimes.
It is. But it acknowledges the market's generally negative view of these tariffs and the real potential for harm to the economy.
And importantly, it stays neutral on the politics, right?
Yeah.
Just focuses on the economic analysis from the source material.
Yeah, purely informational on that front.
Okay, so let's try to bring this all together.
Yeah.
This deep dive based on that FinTech video.
Yeah.
It shows tariffs are, well, complicated.
Definitely complicated. They've got this long history, huge potential effects, intended and unintended. And right now, they're adding a lot of uncertainty for everyone.
Yeah, for you listening, that uncertainty is key. But, as the video suggests, even with that, maybe there are pockets of opportunity.
Right. Companies tied to that domestic manufacturing, push automation, infrastructure, and maybe strategies for investors just looking to lower the bumps in the road, like that low volatility ETF.
So hopefully this discussion gave you a clearer picture, a framework for thinking about it without feeling totally overwhelmed by it all.
That's the goal. And maybe one last thought to kick around, something for you to mull over.
Yeah.
Given how complex tariffs are and all the debate about whether they even work as intended, what other tools could governments use to achieve those same goals, like supporting industry or addressing trade issues? Are there better ways?
That's a good question. Something to think about beyond just tariffs.
Exactly. Because even when things feel uncertain, like now, understanding these bigger trends, these policy debates, it can be really valuable for navigating what comes next.
Absolutely. Well, thanks for taking this deep dive with us today.